This is trade planning with the askSlim team. We're going to take you from analysis to the trade idea. You can see the ideas that we're going to do here right now. So I want to give you a little, preliminary here as to how we do this, and that is we all look at our analysis all during the week, and you can see that we come up with different ideas. We all have the same approach to our analysis, of course. This team learned from me and the style of analysis that I developed all the way back when I started to become a trader in the CBOE in 1974. And they all came on one at a time, learning what we did, and all have become experts in this style of analysis. So great team, great analysis. When you look at the fact that we all came up with different ideas, it shows you the importance of having a sizable universe. And of course, we look at 300, 400, 500 stocks and 24 different futures plus ETFs. So we look at a big universe of stocks, and it changes now and then because our members ask us different questions, and we do expand it. And this analysis comes out of that very large universe. I always encourage people when I coach them that they should have a universe of at least 50 or 100 stocks and ETFs and even futures in order to have be able to really learn more and be able to find trades in there when there's not a lot going on in the markets. The analysis is some of the evidence analysis. We use multiple time frames, cycle analysis. Essentially, we're looking at money flows, the rhythms of the market or the heartbeat of the market. We add in our proprietary indicators, which are based on momentum, support, resistance levels, which we do through our swing high and swing low analysis and our projections that we put in. And as we project in price and time, which almost no other group of analysts does. They usually give you price projections without a good idea about time. But that's one of the things about cycle analysis is that you can really get a good sense about time. So we're going to show you our analysis right now. And I'm going to look at TLT, which is the bond market. Katie will look at McDonald's. RV at Ford, and Matt is going to look at Apple. And you can see we're put in there the direction that we're going to make the trade. And RV is the only one bringing alongside trade now. And three of us have short-term outlooks, and Matt is going to have an intermediate-term outlook in his analysis. So let's switch over now as we look at TLT. So when I do my analysis, I always open up this type of a grid. This has the weekly on the left and the daily on the right. And that's what I want to look at is, let me just get these pointers up properly here. What I want to look at are the cycle rhythms and the momentum conditions in the market. So the first thing I'm going to look at is what are the longer term dominant forces, and that's on the weekly chart. This is really a very interesting one because you could see the cycle brackets on the bottom, and each of these dominant cycles, which is measured from the low to the low, is divided into 4 minor cycles. So these are kind of quarter cycles in here. And something happened in here, and what would normally be the final cycle or the fourth cycle that you see over here, aligning with the dominant cycle would normally bring the biggest decline, or what we call the period of risk. However, as this moved up, and this is our momentum indicator right over here, you see that green arrow pointing to the upturn in the reversal scout, that, would normally move up and then it would turn down again pretty soon and you get this big sell-off potentially in here. But it lengthened in time and moved up through the 78.6% resistance. And that told me that something was changing, that the energies, which have been around for many, many years with very good alignments, now were shifting. And so I have this note in here that the cycle is shifting for our members there, and it moves back 1 full minor cycle. That means that the dominant forces really ended right over here. And that's why you see that shifted cycle with the dots right there. What that sets up, and I'll just look a little closer in here, is a condition where the dominant resistances were met and it failed. The momentum turned down here with our reversal scout, and that told me we're in a corrective phase. Now, this correction is likely to get support in here, but time-wise, you can see the note in here. Synced troughs end in March or April, so that our users know that the daily chart show that there are lows or potential declines into the end of March or the end of April. That tells me that this declining phase is likely to last that long, and then it tells me that this daily chart in here is likely to have not only a decline right over here, but also a rally and then probably another decline over there. So I have this noted as sell pending. In the meantime, you could see the very nice cycle rhythms right in here, where the lows are showing up where they should right here and projecting out in time to the ideal trough here at the end of February. Or if I highlight this, right here towards the end of March or the beginning of April. So that says that when it gets up into this area, it's a sell zone, and that's why it's marked sell zone. So this is a short as far as I'm concerned. And remember, I said that I thought yields would get up in the 10 years to 4.4 to 4.53%. This is in line with that of a decline coming right over here. So this is the short-term decline I'm looking for. I think it's shortable now. You could see the momentum here on the slim ribbon where it is facing to the downside. That turns these bars red. And you can see in here the slim ribbon PO is red. You can see when it was green and it gave you all these resumption arrows right there, the market was just in solid upward move, and the slim ribbon often gives support. Now you can see the slim ribbon giving the resistance right over there, and in a declining mode, in a declining phase, as we call it right over here, rising phase, peaking phase, declining phase, and then the bottoming phase. So that says to me there's a decline coming in here, and then probably a rally, and then another sell zone, which will be established through wherever this low is made right over here. So there are two opportunities in, as far as I can see, a very short term, or what we might call near term in here, and then a rally, and then another selling opportunity somewhere out over here. So that's a look, as you can see, as I look at the weekly here, and I see the declining phase and the negative momentum. I look at the daily here, I see the declining phase and the negative momentum, failures in resistance. It just speaks loudly to me that there is very likely selling opportunities like we just had still out there. And that makes this, in my opinion, a short-term short in TLT. In other words, we're looking for still some rising in or increases in interest rates on the short term, maybe out for the next several weeks. That is my look at TLT. Now I'm going to invite my team to come on, and Katie will be next looking at McDonald's. Katie, you can take it.
Okay, great. So we're going to start by taking a look first at this weekly chart of McDonald's. And I want you to notice this positively configured cycle and right-hand translation. That means that the peak of the cycle occurred on the right-hand side, leaving little time for a retracement, and also that the cycle ends higher than where it began. Here we got a bearish engulfing candlestick just above the prior cycle peak and began to retrace. The reversal scout is purple, showing negative momentum. And we have a weekly cycle timing window that begins on Monday and goes through mid-April. So that period of time is when we expect McDonald's to make its intermediate cycle low and then begin to move up into the rising phase of the next cycle. So this will be bullish once we have confirmation that our intermediate low is in, provided that it continues to hold up through this timing period. Now let's switch over to the daily chart. Here you'll notice that the cycle that we are currently in, it ends in mid-March. So this cycle fits within that cycle timing window from the weekly chart. Momentum in here is negative with both the reversal scout as well as the slim ribbon that colors the candles red, green, or gray, depending on the momentum. So this prior cycle was negatively configured. It ended lower than where it began. So when that happens, the probabilities favor not being able to take out the prior cycle high. So we created a resistance zone using that prior cycle high and the prior cycle low. And we are trading just below the 50% fib of that resistance zone. We also have a 78.6% fib up here at about 298. So we're going to watch these levels and we're going to watch the momentum on the lower time frame chart for a short side entry going into this March time period. Um, Momentum on the 2-hour chart turned positive yesterday, so we can watch that for an entry signal. Now, in terms of a target price, these green horizontal lines down here represent the supports from the weekly chart. So our initial target is about 281. That's basically a retest of the cycle low. And if it breaks below that, then the next would be the 50% fib at about 274. Now, if McDonald's were able to get through these upside resistance levels, then momentum would have improved in here, and that would indicate to us that something has changed, possibly an early intermediate low. So that would invalidate the trade idea. We'll be keeping a close eye on McDonald's for it to respect these levels and return to negative momentum on the lower time frame charts to give us that bearish entry. So at that time, depending on the implied volatility in the options, you could buy a put or a put zebra if your account size allows that. You could also buy a put spread or sell a call spread. And that's my analysis on McDonald's. Over to you, Arby.
All right, Katie, thanks so much. Let's go ahead and jump over to my screen and we'll look at a long trade idea in Ford. So this is a chart here of the weekly and daily for Ford. Let's go ahead and pull up the weekly time frame here, and you'll see that that we have just formed a key low here in Ford. There was a low that was due right around the end of last year. We turned up very nicely. Let's zoom in a little bit further here. Turned up very nicely, put in our first higher low, and then obviously turned up since then. Overall, this is still acting fine. We're looking for a move through the 61.8 at 1321. Then we have the 78.6 up here at 1413. So it's overall acting fine on the intermediate term. Shift over now to the short term. You can see that we had a low that was due here, right around this area right here. We turned up, put in the slightly higher low, got to move towards that 78.6, put in another higher low, and then a higher high on an earnings move, and then now a nice flag. So what we're looking for is for it to hold this zone right here. If it loses the 61.8, that would say that this is, likely not going to work. So that risk on this idea is right around 50 cents. We're looking for a move into this zone here in blue, which is 87 cents higher from the zone on the downside, and that's 1308 to 1369. Okay, so that's our overall picture here in Ford. Acting well, we are watching for a flag, and then for this to turn up shortly, as there is a minor low that is due right around now. And that is our look here at Ford, and I will hand this off to you, Matt, to look at Apple.
Excellent. It is always fun and interesting to see the team perform their analysis and step through the trading plans. I'm going to share my screen. Just give me a thumbs up if you can see the Apple Weekly. Excellent. So as traders, we have the job where we have to wear multiple hats. We have to be a scientist, an analyst, and a strategist. We have to integrate these skills, as you see with the team here, so that we can devise an objective methodology, apply the methodology to produce technical evidence, and then convert that analysis into a trading plan. There are no certainties. However, your methodology should put the odds of your trading plan in your favor, and then you have your money management rules to control your risk. So as Slim and Arby mentioned, I'm going to do a segment here on Apple. I have up here the core trade planning questions that we like to look at. You're going to be able to define your outlook period, a directional bias, your key levels, including reevaluating where things have changed. And then you need to be able to determine, once you've completed that process, that's some of the evidence. Do I have a clear tradable edge? And then from there, what are the signals that you need to see so that your trade setup is a go? All right, so as we look at Apple here, and we look at where this cycle completed, it actually was a overall bullish condition, a positive condition, where we had the close of the cycle really only coming into about the 38.2% retracement level from this prior cycle low to where this this corrective phase ended. And coming into this next cycle, you would then expect, if you had a positive overall condition, positive cycle structure, that once that momentum turned back up, there was a higher probability that we would retest or break out above that prior high. That's exactly what Apple did in this rising phase. But then it ran into trouble. And when that gap down occurred in the beginning of the year, that momentum on the weekly shifted negative. And since then, it has really traced out some lower lows over the weekly periods. And that has affected on the weekly chart here, the overall minor cycle structure, turning that negative. So that's the picture on the weekly, but really it's where, when we get into the daily chart, where the additional details emerge for solidifying the trading plan. And as Slim mentioned, and as you see with RV and Katie, it's very important that you have this multiple time frame ability to look at the analysis so those details can emerge. So I'm looking at the daily chart here. And when we came into the January period, we set a cycle low, and we had a decent rally off of that low in that rising phase, actually making a couple of prints above that 78.6, but then things turned negative rather quickly. And we actually had a violation of the prior cycle low. We had a test of that cycle low here in mid-January, and then we actually broke it here in early February. This then shifted this pattern structure negative and suggested that we had a left-hand translation that had occurred, and that the rallies were likely to struggle, and that now that we're into the late peaking and declining phases, the risks pick up. So you have time against you if you're a bull, and time with you if you're a bear. And you also have, right now, based on the price action, you have the trend a negative. So that cycle structure is negative. So now what we're looking at here is over the next, I have an intermediate outlook, it's probably the next 2 to 4 weeks or so. So typically the intermediate outlook is 3 to 8, our short term is 1 to 3. So it's right on the tail end of that short term, getting into that intermediate, where the projection zone comes here right around 177.60 to 173.92, based on some swing high, swing low analysis that I performed. And right now I have a couple of reevaluation levels to pay attention to that would suggest that I have to review the analysis. The first is a close above 190 would force me to reevaluate that downside projection. And then the repair of the overall negative condition would occur with a push above 192.80. So that is the review of Apple at this time. And finally, I wanted to say about what are the signals that would suggest that a trade is a go. I think that's always important to look at. And that would be, one of the examples here is the Slim Ribbon PO, which fired a negative continuation signal here on February 13th, suggesting that this rally attempt, while maintaining that negative momentum, was that rally is likely failing, and the continuation of the more dominant negative momentum was beginning again. And that's what you saw here as we've continued now lower. And now as I pull over a multiple time frame grid here, this is really what it takes to get a good sense of other potential signals that suggest the trade is a go in that direction that you're looking for. And you can see here that the Slim Ribbon turned negative. This was on 212. So these, I'm just trying to provide some examples of shorter duration timeframes that help with making those entry decisions. And then even on the 15-minute here, if I saw the Slim Ribbon return back to negative, that would suggest that a continuation on that downside was likely in motion.